Should you buy shares of Google down 2.5% in the after hours despite a nearly monstrous 30% year-to-date gain and a 50% rally over the past 1 year? We'll take a look at their Q2 results, which came out after the bell. We'll also take a look at some news items that's been coming out of Google really over the past week and really even today as well. Then we'll take a look at the stock chart. This one, like we said, on a monster rally year to date and over the past 1 year, now taking somewhat of a breather at the higher ends of this channel. We'll see whether shares of Google can maybe continue to channel higher or if a pullback will represent a buying opportunity. As always, if you're new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Google just have been on a monster tear over the past 1 year, now pushing north of a $2.2 trillion market cap. Keep in mind, this one began paying that dividend, call it, I believe, last quarter. And so now that dividend rate on a forward basis, just 20 cents per share. And on top of that, not a huge forward earnings multiple you pay on the stock, just around 24 times. Certainly one of the more reasonable ones when it comes to big tech. Now, top line revenues came in at $84.74 billion. That is for the last 3 months. This company is doing well over $25 billion every month. Keep in mind, that is just a staggering number to wrap your head around. That was on top of that growth of 13.6% year over year, did beat estimates by close to 450 million. In terms of Q2 GAAP EPS, that came in at $1.89, again with a small beat, but a beat nonetheless of 4 cents. So as we take a look at this print, business over at Google is not just usual, it's actually a lot better than usual. You had your top line figures up 14%. They also said they saw strength in search as well as cloud, and for the first time the Google Cloud segment exceeding $10 billion in quarterly revenue. And what's even more impressive, and I think what's more exciting to investors, is that the operating profits are just starting to flow in for the cloud business, as you had operating profits of over $1 billion. We'll take a look more into that when we get over to their segment results. As we look ahead to the next couple of quarters, you're expecting that low teens growth on that revenue side. Next quarter, we're expecting $85.9 billion. Look, they came in with right around $500 million higher than what Wall Street anticipated. So certainly wouldn't be surprised if they come in probably well north of $86 billion. And then for the Q4, really when advertising is in a frenzy, I actually wouldn't be surprised if they get extremely close to $100 billion quarter in this upcoming Q4. Certainly if you see the consumer being in a good position and then you have small businesses and really all businesses advertising like a frenzy, yeah, I wouldn't be surprised if they actually get very, very close to $100 billion quarter in Q4. In terms of the bottom line, that we know is just exploding over at Google, up 28%, pardon me, higher than 28% in this most recent Q2. They're expecting another 18% quarter next quarter. And then again, Q4 is really the upside you expect for Google, is close to 23% growth on that bottom line. But you see there's a big range between the low and the high estimates for that Q4. The high end closer to $2.33 for that bottom line. So certainly Google has a room to surprise to the upside in that Q4, certainly depending on how strong we see advertising being on that search side. Now, news coming out today that Google could look to acquire GitLab, which is really a version control software company, after a potential M&A target, Wiz, that didn't go through. So Wiz is a cybersecurity firm that Google was reportedly in talks to buy and acquire, and that would have been a $23 billion acquisition. And certainly cybersecurity companies coming off of the incidents last week could have been a great look for Google to pick up this cybersecurity firm. But look, that deal fell through, and now they're certainly in talks to buy another company. I think that can bolster on a little bit of inorganic growth. This company certainly has great organic growth, and that is what Google is looking to acquire. Also, Microsoft could be the next in line to pick up a company like Wiz. And look, the M&A environment just ticking back up, as you have Wiz that was roughly $1 billion in annual recurring revenue. Google was willing to pay close to 23 times sales for that. GitLab is a bit smaller of a company, nearly $9 billion, trades on the public market, but certainly you would have to pay a premium to pick up a company like that. So it could be a big acquisition over at Google. When we get to their financials, we'll see they certainly do have the cash to support acquisitions like that. Now, today you had ad tech names rise as Google tweaks its privacy sandbox approach. So the privacy sandbox approach really is a relationship between the cookies and web privacy, not two terms that often go hand in hand, considering they're really on the other sides of what they want. And so Google has been facing a ton of backlash from regulatory pressure, basically on how they manage both user privacy and the ad-supported internet. And certainly they are now changing their approach And initially they were planning to remove the third-party cookies altogether from their Chrome browser. Now they will look to offer the user a prompt, or essentially a choice, in order to have the user decide whether they want those third-party cookies from other advertisers tracking them as they move across the web. And so look, while this will have certainly a meaningful impact on Google's search and advertising business, it will still take a couple of quarters, if not years, in order to see how this really affects both the advertisers that continue to spend their dollars on Google search on their browser, but also the users that continue to use a Chrome browser compared to browsers like Safari or Firefox even. And look, if you missed the ad taken out by Apple earlier this week, they certainly targeted Google and Chrome, really saying that it's one of the browsers that continuously watches what you're doing, watches your activities, in order to provide that valuable information or valuable data to the advertisers. And I think that's one of the things that makes advertising on Google search and on Chrome so lucrative, considering the fact that you can track your users so well in advance. And so we'll look to continue to track the story, see really how it plays out with people over in Washington, also people in different parts of the world, especially the UK's antitrust watchdog. And we'll also see how users really take this fact. I'm sure some users will absolutely opt out of those third-party cookies tracking them, but I think a lot of users will simply just ignore and continue to move on to their daily search habits. Now, in terms of the most recent quarters, search and advertising certainly looks to continue to be absolutely stellar and very strong over at Google, as you had Google search coming up to $48.5 billion. That's for the last 3 months. Especially on top of that, you had YouTube ads once again coming in stronger, up nearly $1 billion, up to $8.6 billion. In terms of top line revenue. You also had basically flat to muted growth, slightly declining revenues on the Google network side. So YouTube advertising surpassing your revenues on the Google network side. I think that's showing more strength in Google ads, in YouTube ads, rather than a weakness in terms of Google network. So your overall advertising revenues coming in at $64.6 billion. You add another 9.3 in subscription platforms and probably Android devices, and you get to a services business of $73.9 billion. Last year, you were at 66.2. What's even more impressive is the Google Cloud segment. So you had revenues on the cloud business grow from 8 billion up to 10.3 billion. So year over year, solid expansion on those top line revenues. What's even more impressive is the operating income expansion on that cloud business, as you had operating income go from 400 million up to nearly $1.2 billion in terms of operating income for Google Cloud. And so what we see over here is the margins expanding absolutely stellar over at Google, from 29% operating margin up to 32% in this most recent quarter. So while they're growing their top line by nearly 15% on a constant currency basis, they're also continuing to grow the operating margins alongside that. So each dollar of revenue goes a bit farther in terms of bottom line profitability. And I think this really just goes to show that this is still the early innings in terms of Google Cloud's turn to profitability. They will continue to ramp revenues there, continue to be a at least formidable third behind Azure, behind AWS, and continue to bet on Google Cloud, and where operating profits can just continue to jump meaningfully on a year-over-year basis. Where they're continuing to lose money, though, is still on their other bets and on Alphabet level activities. I think no one really minds them losing money here, while they continue to print absolutely stellar operating income, both from services, advertising, and now the Google Cloud segment. Now, when we get to the financials, this is probably one of the easiest financials to walk through. So certainly if you're new to walking through these financials, I would recommend pull up Google's income statement, balance sheet, and cash flows. And it's fairly simple to understand. They kick things off with their balance sheet simply because it looks absolutely stellar. You have the left-hand column, which is the end of last year. You have the right-hand side, which is the most recent quarter. So you're looking at a 6-month picture, not quite year over year, considering this is their Q2. You have cash and equivalents up to $27 billion. Last year, you were at, last 6 months ago, you were at $24 billion. Your total cash and equivalents did tick down just a little bit, but seems like their property, plant, and equipment added on right around $20 billion. And so Google, as we get down to the cash flows, you see this company continues to invest just heavily in terms of property and equipment, really on that data center build out. From an assets perspective, everything looking all expected, and from a liabilities perspective, you see long-term debt sitting roughly flat on a 6-month basis at $13.2 billion. Nothing to be overly concerned about, because this company prints a boatload in free cash flow, and that long-term debt really not having a significant impact on Google's financials. In terms of the statement of income, we have revenues at $84.7 billion. Like we said, that was growth of nearly 15% year over year. Your cost of revenues also did tick up, not really in line, or pardon me, not as much as your revenues. So you had some operating margin expansion there. Your R&D also ticking up just slightly up to 11.8 billion. Last year you were at 10.5. Sales and marketing actually staying basically flat year over year. So despite growing your top line by close to 15%, you're not expanding on your sales and marketing expense. And then on top of that, you're also declining on your G&A expense. So back office expenses over at Google really held in check. I think their executives are doing a great job controlling that stock-based compensation. And then your total cost and expenses growing just $5 billion despite adding 10 billion onto your revenues. And so really that's where you see your operating income expand from 21.8 up to $27.4 billion. Again, 29% operating margins last year, now up to close to 32%. So while you're getting revenue growth, you're also getting operating margin expansion. You're also getting tremendous net income growth, up from 18.3 now up to 23.6 billion in terms of that net income. What's even more impressive, we continue to go down to the statement of cash flows. We pull down that $23.6 billion net income figure. We get to add back a decent amount of stock-based compensation, some depreciation on that property and equipment, and we get to 26.6 billion in operating cash flows. And so this is really the amount of money now Google has each quarter to play around with. So what do? They spend exactly half of that in the purchase of property, plant, and equipment. Like we said at the top, this company added a ton in property and equipment onto their balance sheet, and that can really be shown here as they continue to spend just a boatload on that in terms of their cash flow. So last year they spent roughly 6.8 billion on purchase of property and equipment. This year they've doubled that, in fact more than doubled that at 13.2 billion. Similar story on a 6-month basis. You've nearly doubled your spend on property and equipment, and this is really where Google is betting big on for the next couple of years. They're building out those TPUs or tensor processing units and making their push into AI, and certainly wouldn't be overly concerned with the spend on this as long as they continue to get an ROI and continue to really see Google Cloud performing well. What they use the rest of that cash, and from more of it, is for the payment of their dividend, which they started, I believe, last quarter at $2.5 billion for the most recent quarter, and then they continue to buy back nearly 15 billion in terms of their common stock. So you're getting a buyback, you're now also getting a dividend, you're getting some debt pay downs, and again, you're getting heavy investment into property and equipment. And this is a company that can really afford that because of that just $26 billion in operating cash flow that they print. So all things looking stellar from Google's financials. Revenues coming higher, earnings coming higher, operating margins expanding, and then free cash flow continuing to be absolutely stellar. Nothing to be overly concerned about. Now in the after hours, you're seeing shares down right around 2%. I think nothing from this print gave us the figure that Google will really continue to push up higher past these all-time highs at $190 a share. Really everything was in line to slightly better. Advertising remains strong, YouTube remains strong, and then the cloud business continues to chug along. I think there had to be some significant announcement in order to have shares push up past this all-time high. So since we didn't get that, we're kind of just hanging around our highs at nearly $180 a share. Certainly at these levels, you could make a case to maybe step in and buy a share or two of Google. Certainly wouldn't be all too excited considering the fact that you are trading at these elevated levels from an extended rally in the last couple of months. Certainly if you can get a pushback down into this range of higher highs and higher lows, as you continue to make a deeper and deeper pullback, that's when I would start picking up more and more shares of Google. So if you can get down sub, I'd say $160 a share, that's probably a great level, or you should probably look to unload a sizable position in Google, considering you have a nearly, call it, 2-year uptrend acting in your favor. And I can move these green lines higher just a little bit. These are your support lines where shares of Google certainly will see a good level of support. And if you are already a shareholder in Google, I think there's no real reason for you to come in and sell your shares at these levels. These results really were fantastic. I think any pullback south of, really call it 170, should be bought in shares of Google. That was my take on shares of Google. One, I think that is a stellar company, continues to post absolutely stellar results, both from a top line figure, and you have bottom line expanding close to 20%. And then on top of that, you have operating margins expanding due to the fact that you have Google Cloud just turning over to, I'd say, meaningful profitability. Let me know your thoughts on this one in the comment section below. I think one you can continue to hold and dollar cost in as it heads lower. As always, thanks so much for listening, and I'll catch you guys in the next video.